All right. Welcome to the Yeoman Podcast. I'm your host, Jeff Graham. On Yeoman, I will speak with people who build and grow things, people who create art, and people who think about community, meaning, and purpose. Today is Wednesday, March 6th, 2024. This afternoon, I'm joined by Coby Lefkowitz. Coby is a developer who lives in New York City and is primarily building in Southern California. I first met Coby, like I meet many incredibly wonderful, thoughtful people, through Twitter. He was relentlessly sharing newly built examples of reasons we can be optimistic about humans' capacity to create beauty in the modern era. Not long after that, we met in real life at the first Ion Dialogues in Charleston, South Carolina. That's a small event for developers, architects, and urbanists that I host along with my brother Vince and my father Tom. Since the first dialogues, I'm glad to say Coby and I have become friends, and which is very delightful to me. Last week, Coby was a guest contributor on Noah Smith's blog. You may know Noah as No Opinion, like opinion, but with the name Noah in place of the O at the very beginning. I encourage you to read that. I encourage you to follow Noah on Twitter. Coby wrote a thought-provoking and accessible to the layperson post on real estate finance, why it matters, and how it shapes what gets built and who builds it. The title of that article is Why Small Developers Are Getting Squeezed Out of the Housing Market. I'm sure we'll cover a lot of ground, but we'll certainly spend time on that topic. So buckle up. We're about to dive deep into the connection between finance, community, human scale, and beauty. Coby, thank you for joining me on the Yeoman Podcast.
Jeff, thank you so much for having me and for that terrific introduction. Much more than I'm sure I deserve, but I'm really excited to have this conversation today. And I think the genesis of it really started with you in Charleston back in the fall. You know, we had
really?
all these percolating conversations. And when you asked me to be a provocateur at the last dialogues, I think that was the seed that was planted, and there have been a lot of other ideas germinating around there. But I owe a debt of gratitude for that piece and for this conversation to you for first planting that idea.
Oh well, let's officially call it even, because I get so much out of my time with you. So my first question has two parts, and hopefully in answering, you can help me shed some of my provincial preconceptions. So if you could choose to live in the South and build in the South, which presumably you could, why do you live in New York City, and why are you developing real estate in Southern California?
That's a good surprise question. So I love the South. I went to school in the South, in Charlottesville. Some people might not consider that proper South, but south of the Mason-Dixon.
What do they say? All the hustle and bustle of the South with all the manners and grace of the North. Is that what that's called?
I love the South. There's no reason why I wouldn't live there or spend time there. I went to school in Charlottesville, and as we were joking, some might say that's the true South or not, but south of the Mason-Dixon line for me means that I'm in the South. Some parts of Maryland, you might contest that. And as for the second part, I don't know. Southern California is a beautiful part of the world. It is certainly not easy to build there. It is easier than it is in New York City, which is why I don't build here. It's a very low bar to cross to build and or to more easily build in somewhere else in New York. But I stay really because of inertia, in family. And this is where I'm rooted, and this is where my friends are. This is where I grew up. I'm not a New York exceptionalist by any means, where I think this is the only place that one must be in the universe to tap into some special source of knowledge, as I think a lot of people might feel. But it's more than anything home. And hopefully one day I can build here. And if not, I remain very open to the possibility of going down south.
Well, that's a pretty good reason, to stay in a place because you're from there. I'm a big fan of that. What do they say? Grow where you're planted.
That's right.
And especially if you're in the business of building community, it's a really big deal. I have a real question for you. I wanted to kick things off reading two excerpts from your essay, your post, your article, and I'll definitely link to that in the show notes here. Small builders imbue identity, intrigue, and charm into the places they work and confer significant quantitative benefits like providing housing typologies that larger firms might not be willing to or able to build and offering it at attainable pricing. And then you go on to say, we'll dive into in this piece, we'll dive into how America's finance system is leading to negative consequences, privileging large-scale institutional developments at the expense of more incremental community-based building, and why we should work to support more of the latter. Small developers are the backbone of our communities. If they can't access financing, our cities and towns will materially worsen. And then you go on much later in the piece. You say, with hope, the credit markets and regulatory state will recognize the importance of supporting small-scale development, shifting momentum away from the institutionalized, risk-averse, beauty-averse, intrigue-averse world of contemporary development to the magnificent idiosyncrasies of small community building. The cities of our dreams were not built by institutions, but by industrious, proud, maverick developers who came in all shapes and sizes. Neighborhoods felt neighborly because the mom and pops who built and owned the buildings lived close by. They had a vested interest in making them as good and welcoming as possible. And hopefully those two quotes will help the listeners out there understand why this particular essay I thought was really important to talk about with you on Yeoman. And between those two quotes, you spend several thousand words describing how the financing climate makes it especially difficult for small developers to compete with larger ones. Clearly, as you describe, that was not always the case. There was a time before financialization and the institutionalization of real estate development where the overwhelming majority of what got built was built by a small builder, a boutique developer, or even self-built by an owner. When this was the case, as you note, the person doing the building was almost certainly a part of the community. That is now the exception rather than the rule. I'm sure the trend started before I was born. But it most certainly accelerated in my lifetime. It seems to me like it was in two spurts, maybe the mid-90s and the 20-teens. So my question for you is, what do you think prompted that change?
It's certainly a much longer story than I think we can dive into here, or that I would have the knowledge to fully be able to represent. I do want to preface it to your point that it is not brand new. This is not a several-year-old occurrence. It's been building on momentum for many decades. We had industrial scale builders in the 19th century in America or North America. And so many neighborhoods were created, especially in Brooklyn, in New York, but certainly in Chicago, St. Louis, a lot of Midwestern factory cities or in industrial metropolises, rather, Baltimore as well. There were industrial scale builders would set up hundreds of row homes at the same time, but it wasn't quite at an institutional scale. The capital structure was very different. We can touch on why that may be. But for this contemporary era, I do think there was an acceleration in the 90s, and as you pointed out, and now it is sort of reaccelerated in the 2010s, which builds off of really this post-war, let's say 50s through 70s suburbanization, and now is the back to city. The city movement has solidified over the last 30 to 40 years. We've seen that in urban areas, and I think urban denizens are getting a taste of what suburban and ex-urban dwellers have felt for some time. Why did this happen? There's a series of complicated tax laws, specifically to REIT structure in the early 90s, that are probably more determinative than anything else I've been able to figure out. And basically what they did was they got large-scale institutional investors comfortable with allocating capital into real estate in a way that they hadn't before. Prior to the 90s, there were commercial office REITs, but they did not take in the amount of capital that they had before the pandemic. Obviously, office is in secular decline right now. So maybe it's more helpful to think about housing, and certainly multifamily REITs and single strategy REITs have done very well. Prior to the 90s, real estate was seen as this pretty precarious asset class. Why would you ever want to deal with where somebody lived that was just a little too messy, right? So many things could go wrong. Best to keep home and work separate. Started to change with these tax laws, and there were firms, certainly Sam Zell with Equity Office and Equity Residential, Stephen Schwartzman at Blackstone were two of the first bigger groups to enter the space. Specific to Schwartzman and Blackstone, they were buying value add complexes in the Sun Belt in the late 80s and early 90s. And I forget the exact year, but they, using these novel tax strategies that enabled them to raise money from the public markets, or they're a private market, but then they could spin these assets off into public markets. They delivered outstanding returns, returns that you could only dream of previously. We're talking IRRs in the 40, 50, 60%. And so as soon as this happened, institutions said, well, hold on a second. We didn't know that you could generate returns like this in real estate by doing value add. That sort of got them interested and wetted their beak. After they dipped their toes in, they got more and more comfortable. And over time, they began shifting their resources from the public markets to more private market strategies. And that wave came through in the 90s and 2000s. And then, as you so well point out, that second wave came in the 2010s. And there's two reasons for that. One, there's a post-Great financial crisis and Great Recession recovery. And so there was a lot of development activity that was inhibited or that was stalled, and then it restarted some years later.
We were doing, at least for new home permits, I think it got up to like incredibly way overbuilding at something like over 2 million permits a year.
Yeah.
And then it fell down to way under replacement for a number of years, like 600,000 permits for a number of times. I don't even think do you know where it is now? I think it's in the 1,200 or 1.2 million or 1.3 million, which is still below the amount of housing we need for people. That's why, in part, why housing is so expensive.
Certainly, I'm not sure of the exact number, but that sounds right to me, in that range. And we're certainly below replacement. And not only are we below replacement for present year, but we have a backlog of many years that we're trying to dig ourselves out of. And we're dealing with that. And in that vacuum, large institutional allocators sort of jumped onto this scarcity of supply. This is perhaps a tangent. Maybe we'll just put a pin in it. Building code reform in the late 2000s also facilitated these inflows of capital, with the IBC allowing for type 5 over type 1 construction, which is wood frame over concrete podiums, which allowed for significantly more density. Previous to that point, I believe you would either have to have masonry or concrete or steel frame, which was just prohibitively expensive for a lot of these structures above 5 stories. So now you could build a lot more density, a lot more cheaply. And at that point, institutions could allocate a lot more money into these structures that previously they couldn't. So it's this story of building code reform, REIT reform in the early 90s, which is strange because now most of this capital does not flow into the public market. It's in the private markets that have conspired to shift our landscape in these ways.
I didn't know that. So can you explain the 5/1? Because people tend to think that when they hear it relating to real estate, they tend to think it refers to the floors. But that's not what it is. And so if you're as old as I am, or I guess as old as you are too, you can remember seeing all this type of construction going. So explain what that is, please.
Yeah, and I'll admit, for a long time, I thought 5/1 was 5 stories of residential over 1 story of commercial, because a lot of these buildings are 6 stories tall, And then I think I first questioned it when I saw a 5-story building. I was like, well, that's a 4/1, isn't it? And then I talked with some architects and engineers that said, no, not quite. It's type 5. That there's the International Building Code. There's different classifications of construction typologies, and they're important for different code requirements. If you're building a high rise, for example, you're not going to want to build it out of wood frame. You're going to have to use steel, reinforced steel, depending on how tall it is, and then just steel beams. So type 5 refers to wood frame, and type 1 is non-combustible, but really concrete cement. And so you'll also hear this stick over podium, stick wood, concrete podium.
Yeah. I've heard, I've never been in multifamily development doing projects like that, but I have plenty of friends who are, and they derisively refer to 5/1 as super cheap and disposable. And their development company would never ever do that. Is that a thing? Is there some snobbery among multifamily developers around that?
There's definitely snobbery and definitely derision. They've, depending on what part of the ideological spectrum you're on, there are different names for these new buildings. So a Texas donut was kind of the fun-loving first name that people called these, because in Texas they would be wrapped around parking garages. So the whole of the donut would be parking, and then wrapped around it would be the housing. In more progressive circles, they call them gentrification boxes, which is just not quite true. We can get into what gentrification is and isn't, but they certainly don't call it gentrification. Then in other parts, they maybe more conservative circles, they might say they're like modern commie blocks, and so like everyone looks at them with some level of derision. Not everyone. There are people who really enjoy them. I think without giving any personal privilege to any of these views, like they do inspire passion across the political spectrum, across the development spectrum. Unfortunately, I don't know how people, if you're going to build a 60-unit building, a 5-story 60-unit building, you would build something that isn't a 5/1. Construction costs have increased extraordinarily in the last 5 years in the post-pandemic period. I don't want to throw out a number that I can't stick to, but they are well into the double digits increase over what they were in 2019. And a lot of that is driven by labor. Material pricing is kind of stabilized, but in this environment where your prices could be 30, 40, 50% more expensive than they were 5 years ago, it tends to be that stick over or podium is much cheaper than concrete. Mass timber is a new form that people are experimenting with, but a lot of trades don't have great experience with that just yet. So you need to get highly specialized labor, which means more expensive labor, which means more expensive buildings, more expensive rents, so on and so forth. So I'd be very curious. I know there are some developers who are able to build mid-rise apartment buildings that aren't 5/2. But if you're trying to deliver competitive and attainable housing, it's just difficult in today's market to do so without playing that game.
Well, you have a chart, I guess, speaking to this in the, and maybe we can pull it up through this while we're talking about it. But charting from the, I guess, the early 70s through current day, the percentage of housing of new apartment buildings really that are 50 plus units. And it goes from essentially, steady 10 or 15% that were over 50 units. So this is, we're not Texas Donuts or not 5/1 throughout, the 40 years prior to 2000. And then beginning in 2000, it's a steady march up to where now that, now roughly 60% of all housing of apartment buildings, apartment units, I guess, was that, by unit count, are in these much larger buildings.
Yeah.
So I had looked at that, and I'm not aware of that change in the building code, and I just presumed it was the kind of the financialization of real estate and more REITs responsible for more construction, more regional, national developers responsible for those things, and reflective of the financing climate. But it sounds like that may be partly true, but it sounds like you're also saying that was a building code change. Is that right?
Yeah, I just pulled up some notes I have on it. They were being experimented with in the late 90s, but either some revisions in certain. So building codes are almost never worth diving into or just like dipping a toe into, because they are so sprawling, and you start unspooling one string and who knows where that can go. But there are national parent codes that get adopted. There are state level codes. There are local jurisdiction codes. Sometimes they're the same. Sometimes they're not. It's all nebulous. I mean, and this I think we'll talk on in a little bit. Why housing looks different today than it did 100 years ago, and why development is a different practice today than it was even 20 years ago. Because there's just so many different regulations that one must adhere to, that our cities are shaped by code more than artisans or dreams, if you want to get more romantic. So there was some regional adoption of allowing for stick built over podium in the early 2000s. And then in the late 2000s, 2009, 2010, there was a revision to the largest parent code, the International Building Code, which allowed for 5 stories of wood construction, so long as it was treated with fire-rated materials. You see people lamenting these double-loaded corridors where you have 2 means of egress. And there's a lot of people in the urbanist community that are fighting for single stair reform and point access blocks. This was a result of this. These are little wonky things, super technical,
like single stairs, super wonky, but have an enormous impact on the design of buildings, the cost of buildings. And normal people are just, they like look at building and they're like, oh, you're just going around building stuff, whatever. Like, it's not that simple. You have no idea. And I actually would, people kind of suggest that healthcare is the most regulated industry in America. I don't think so. I think I think the building business is far and away more regulated. Like, it's so prescriptive in terms of even what type of window you may put in something, or as you say, like how the rise and the run of a stair, how wide the stair can be, the shape of a handrail, all those things, incredibly prescriptive. I'm interrupting you, but just to like, these things are super wonky. And if you're not in the industry, you'll be like, whatever, but it is, they matter a lot, and they color what everybody builds. And when people lament, like developers are just, building the same thing everywhere. And they're like, well, it's kind of, they have to.
Yeah. No, and thank you for pulling out for a second, because, we're taking this pin out for a second, and zooming out, that, because it can get very technical very quick, and you don't want to get mired down in these details, but you're right. Our cities are products of code. And so all this is to say is that when you marry these code provisions with this massive influx of institutional capital, you see a new form of housing develop that can be scaled up rapidly because of the scale of this capital. But just to put one pin in this, cities have always been shaped by some regulation or the other. In medieval era, it might have been you have to build within the city walls, right? So that privileged a very dense form of development pattern where you had to go vertical, you had to build on top of each other. Didn't have elevators back then, of course, so a lot of these might have been 5, 6, 7-story buildings at the highest. Bologna is in Italy, had some of these medieval towers that were quite tall, in Manhattan of the Middle Ages, but it's not fully habitable in some of those portions. That's a tangent not worth getting to. But I think the one place that people could probably most easily see the impact of regulations on a traditional city would be in Amsterdam, where the canal houses that are so revered today were effectively just a tax dodge. That they had a regulation in the city, whether this was the 17th or 18th century, I'm unsure, or perhaps it could even been earlier. If one expanded beyond 14, 15, 16 feet, they had to pay a frontage on the canal. They had to pay an excise tax. And so what did developers do? They built as narrow as possible. They built very tall. And so if you've ever been in Amsterdam Canal House, the stairs are very, very steep. And they were traders and merchants. And so they were, a lot of these had dual purposes of warehouses. And so you have the wench on the top of the building that you would pull up all materials. You'd have the storehouse in the attic. And so cities have always been creatures of code in one way or another. I think the difference today is that it is so hyper prescriptive that there is you basically don't need to have any level of architectural design, because the city tells you what they want you to design, which architects I know complain about.
Yeah. And architects will be some of the biggest critiques of that. I push back some. In the case of a walled city, was the reason you weren't building outside the wall because the code prevented you from building outside the wall, or was it because you would die if you did?
What if they built the wall a little bit further? There's some governing, but you're right. There weren't the level of regulations in medieval cities as there were even in industrial cities and today. But there have always been barriers to development in one way or the other. In Rome and even in Athens, there were building codes and there were things that one could and couldn't do, which is fascinating to read on today, but certainly far more permissive than what we're able to do.
Have you ever, this is a tangent, but have you ever come across the author, illustrator, David Macaulay in his books? He has all these books about construction and they're illustrated, but he has one about city, and it's about creating a city in Rome. He has one about the creation of the pyramids, cathedrals. I think he's more famous more recently for How Stuff Works books, like beautifully illustrated engineering drawings of how things work. But he goes into one of my favorites of his books, and I would read them to my kids when they were little and would let me do stuff like that, was City. It's David Macaulay, City. And it's just this illustrated thing of the founding of a Roman city. And to your point, he goes into this, like, here's how it was set up, and the they laid out the city this and this. They parceled out things this way, and here's who was allowed to build here, and here's who had all these things going. It's super fascinating. Anyway, bit of a tangent. I recommend that. But on this, the climate for building. I'm not all that old, but I was working in construction as a older teenager, very young man, and I guess the early 90s. And in the olden days, like as an example, I was framing houses then, and if you were going to put windows in the house, and then back then, you would order your window. It would generally be a local cabinet maker that would make the windows, like your local carpenter shop, window shop. But they were a small scale place, and they would make the windows for you right there. And they were relatively simple windows, and you would order them from your local shop. The local shop would manufacture them, deliver them, and you'd install them there in the house. And that's what would happen. But that's not what happens anymore. That's essentially not possible in most markets. Like where I'm building in the North Carolina mountains, like we're in a high wind zone, and there's energy efficiency codes and things like that. And it's not that the local carpenter can't build an energy efficient window or a window that can withstand impact. It's that carpenter can't build enough of them to merit the cost associated with having that window deemed code compliant. And so if you want to use that window that your local carpenter makes, an engineer has to review it, approve it, and provide your local permitting and inspections office with a letter affirming that it meets all those standards, the cost of which is prohibitive. And so instead, what you do, you buy your window from, generally that might be publicly traded, but private equity owned window manufacturer that's theoretically located in the Midwest somewhere, and orders parts from all over the globe and assembles them in a factory, and you order the window, and the windows arrive 8 weeks later, hopefully. It's so different now. Like that's what construction is now. The day of like people building their own houses from the ground up in their own local community with those materials come from there. It's that was a long time ago, and it's it maybe it will come again, but it will be a long time before it does. So this I kind of don't want to try not to be pessimistic or downer. We've got a mutual good friend that gives us a hard time about not being sufficiently optimistic. But those kind of things drive me bonkers. And I'm like, God, can't I just hire Dennis to build my windows because he's awesome and he would love to do it, but I might not do it. Do those things bother you from time to time?
They do. I think part of what, I wouldn't say this portion of it bothers me, but I could understand why someone would be irked by this, is that we can still do those things as I try to preach. We can't do them across all income levels or all houses. Like go to a brand new built luxury, whatever luxury means, because in every market, a luxury home in Tulsa might not even cost half of what a new affordable apartment might be in New York City, right? So it's all relative. But a luxury property oftentimes has very high quality craftsmanship. Perhaps the windows aren't being manufactured by the local carpenter, but a lot of local materials can be sourced, especially in a labor market like New York, where we have a lot of artisans. They're out there. They're just not. A lot of their work is cloistered, right?
Why do you think that's a luxury thing now? It was a rather egalitarian thing. I don't know. I mean, maybe into the 50s, or so.
I would only be guessing. Guess,
I would be guessing too. I mean, some informed guesses, but it's guesses.
My informed guess, and then I'd be curious because your ear is much closer to the ground on this than mine. Is there's been a diminution of these craftsmen and women broadly, and their services became like maybe their services were in as much demand or in more demand as in the past, but they became stretched so thin because there were fewer of them, right? And so it's sort of, we'll get a quote for, let's say, a roofer or an HVAC tech, and if they're really busy and times are really good, they'll give us a quote that's 3 times as high as anyone else. You say, yeah, this is the price. If I'm going to do it, it's not worth my time for this, unless it's this amount. And my sense is that a lot of these craftspeople are in such demand that they can simply charge high prices. The materials are not all that expensive. If you think about moldings for like interior moldings, a lot of it's precast. They're not going in and decorating everything by hand. They certainly may touch it up, but molds are precast generally, which is why they're able to scale up so much, 100 years ago. And that's sort of consistent with what we've seen, and I know a lot of others have seen on the construction side. It's not materials, it's all labor-based. I mean, obviously materials are a big cost, but in some projects, the split might not be 50 labor, 50 material for, $100 job. It could be 70% labor and 80% labor, which is it's a difficult tension because you want people to be paid well for the work that they're doing, especially if it's a skilled job and it's one that is in much demand and is greatly needed. But those costs have to be borne somewhere, and it's difficult to bear them in market rate apartment buildings. So they ply their trade in, single family clients who can afford to pay those commissions.
I don't feel like that's a complete answer, and you're not presenting it as one.
No, it's just a guess.
Because people have always had a profit motive, and supply and demand have always been dynamics.
Yeah.
And the trades have, for as far as I know, for a long time been blue collar, middle class work. It's not like maybe the owner of the cabinet shop now, which is probably a lot bigger than it used to be generally, but maybe that person does pretty well. But generally the cabinet maker is, just earning a regular living. He's not driving a Tesla. Or a Tesla truck, I guess.
Yeah, now, to adjust the analogy, it's there are fewer construction workers today than even pre Great Financial Crisis and Great Recession.
Way fewer, yeah,
and
fewer and older,
right? So there's promises to be fewer still, and I think a lot of people who would have gone into the trades 50, 60, 100 years ago have gone to less technical vocations. The sons of carpenters or the daughters of carpenters might not be going to the trade. They might be working at a marketing agency, or and that is purely anecdote and purely.
No, I think that's kind of unquestionably true. Like demographically, you would say it. I think that's definitely the case.
And so, but it's not a full answer. But I think that would be my hunch as to why these trades become. But they're still in demand. It's not like it's really fascinating to me that even at a you couldn't quite call it institutional, though they are institutions. But let's take some of the most expensive new condo buildings in New York City. You have 220 Central Park South was recently completed. Vornado project. I think there was a sell at over $2 billion. There's a lot of new buildings that are delivering on the Upper East Side. Peter Penoyer is a fairly prominent architect designing these. Robert A.M. Stern. There are a number of people who are designing neo-traditional towers in New York right now, and there are dozens of craftsmen and women on site doing extraordinary work. But these buildings are also very expensive, and my sense is there's that technologically there are ways that we can reduce some of these costs. You may know Micah Springett from Monumental Labs, who's very interesting friend of mine. He got 2 CNC machines that were being used by marble cutters in Italy, and he's using these machines to create first sculptures where you can queue up a design in some program. My illiteracy in technology is going to show here, but he queues up a design. 90% of let's say a given sculpture is cut by this CNC machine, and then the last 10%, the small details, are finished off by artisans and sculptors and painters, and they're doing extraordinary work. And their mandate or their goal was always to expand beyond doing sculptures. These were sort of the lowest hanging fruit that they could try to do first as a proof of concept. And now they're working on architectural features, so reliefs for historic structures. They're able to take precast molds and chisel out these designs with these large machines fairly easily. And so I think we're going to see a reversal or an ability to build non-luxury product, perhaps market rate product, but certainly not luxury, with some of these technologies.
I think you're right. I do. And my sense is that a lot of the really, really hard and dangerous and maybe discouraging is the right word, but a lot of the things about construction that push people away from working with their hands are going to get safer, easier, and a lot of the monotony, the rote work is going to go away as we continue to advance, and there's more pressure on that than ever with the labor challenge that we have. I say this all the time. I don't know if I believe it to be true, but I think part of the labor challenge we're having, I think it's twofold. I think it's complexity in homes. The homes are way more complex than they were 40 years ago, and certainly more 100 years ago. You just use some examples like HVAC. Like those were things that you didn't really plan for in a house, or a laundry room, or appliances themselves are crazy now. But we're also 100 years into telling every young American that they should under no circumstances ever go work with their hands, and they must go to college, and they should go work for a marketing agency. We're 100 years into that, and I think there's always going to be demand for those roles, but I think the luster and promise of that marketing scheme has gone away, and the demand, you can do really well in construction. All the trades I know, owners of those businesses will be just give me a young person with his head screwed on straight, who can show up every day for work on time and is able to learn, and I'll make that person a lot of money.
It's certainly true. Some of the numbers that I know you and I know that, but might blush to say on air are extraordinary that people are making in any given year because of the shortages and the demand for their skills. I mean, you talked in your first episode with Austin Tennell, and the quality of his work is extraordinary in Oklahoma. Yeah, and I think he got out of the accounting business to become a mason. I hope we see more of that, and I think we will. I don't think it's unfounded hope, because when people see the sort of stuff that he's building, and that it's possible, and that he's not sitting at a desk 8 hours a day, or his crew isn't sitting at a desk 8 hours a day, certainly there's some computer work, but they're out in the field, they're using their hands, they're building beautiful stuff. It's so deeply fulfilling. And they're going to do very well because there's a massive market for very high quality structures. I think this pivot away from institutional scale. I can't say that we're going to go from 60% of our structures being 50 units and more, 60% of our multifamily buildings being 50 units or more, to 20%, and 2 to 4 units are going to reign supreme. So maybe this is a marginal change over time, but I think you've certainly seen this success at Ion and in Charleston and with your work in, the genesis of your work in North Carolina, that once people see what they can get, the quality or the variance in quality of life is so significant that they're willing to spend a little bit more, especially because it's not like a lot of these new rental buildings are cheap. And they can't be. When you have elevators, which are very expensive, you have large parking garages to maintain, you have large structures to maintain, high taxes, those costs have to be passed through to renters. So if you're thinking of renting a brand new 1-bedroom for, let's call it $2,500 a month in some city, or you work yourself into the math of either owning a home or renting a home in a property that is of higher quality, built by a smaller developer, those numbers are closer and closer to making sense than I think they've been in some time, just because rents have really run pretty hot.
Yeah. But I think you mentioned, and you spoke to Austin, friend of the show, Austin Tennell, not long ago. And as I recall, I think you began to rattle off, I maybe misremembering, but rattle off all these sort of hidden costs associated with different types of housing. But if you really are kind of doing the math on it, like what it fully costs you to the real cost of living in a place that you don't love and can't walk around and all those sorts of things, it's actually pretty high, and it might not pencil if they were all merged, all transparent.
Yeah, this is something that
am I remembering that correctly? Was that you and him? Or
that's right. Yeah, and I won't go down that rabbit hole here, but keep it at a high level. This is something that Chuck Marone talks about as well at a municipal level. So if you were to wrap a lot of those costs in, the variance between living in a walkable community, or even, it doesn't need to be urbane. You can have a walkable village, right? That's several hundred people. We subsidize car ownership to such an extraordinary extent that if we were to take away fuel subsidies or highway subsidies and either reinvest that in public transit or just, lay those costs, take it away, you're not only is your $1,000 a month on average, average American spending $900 to $1,000 a month on their car. And so if you have two cars, $25,000 a year is not unreasonable for a family to spend. And you were to invest some of that back into the quality of your housing and amortize that over the life of your or the duration of your residency in a certain place, you start to see that these numbers make a lot more sense. But it's very difficult to make that calculus, especially because it's difficult in a place like New York City to ever conceive of being an owner, or in San Francisco, or in these superstar cities. So if I was living in Charlotte and I wanted to, or Atlanta, and I wanted to live in an up and coming neighborhood, and maybe prices today have already escaped the value at which one might think it's reasonable for them to attain it, maybe 5, 6, 7 years ago, because these markets have gotten extraordinarily expensive relative to where they were. You can start to make that calculus in a way that's very difficult in a more expensive city. But I'm a developer, so I think in per square foot numbers, just at a high level budget. You might say, if I built a stick built home with vinyl siding, cheaped out a lot of the materials. Maybe it's big part of the conversation that we don't discuss is that these homes are really, really big. So you're building a 2,000 square foot home. Those costs have to go somewhere. But if you were to take a smaller house, let's say, 1,500 square feet, and build it out of masonry, like what Austin is doing, I think, the dollars per square foot increase that would cost, is offset by some of these hidden underlying costs, not to mention the improved value that I think one would have. But that's a whole, sort of calculus that we can get into.
I wonder if I've intuitively always kind of understood this, but recently had it named for me. It's not an economics major, not a finance guy, but the notion of time preference in economics. Familiar with this term? So time preference is, if you have a high time preference, you are more likely to invest in what is going to give you an immediate return, without regard for the long term. And if you have a low time preference, it would be the reverse. So if you all live on a Caribbean island and it's subject to hurricanes all the time, and you're pretty sure that anything you build there is going to get blown down within a few years. As it relates to construction, you would have a very high time preference. So you're going to build disposably. If you say live in a place where you're thinking about where you're going to build is maybe going to be an improvement that will be experienced by your progeny for generations, you're probably going to have a very low time preference, and you're going to build in such a way that you think it will be both useful for someone 100 years from now, and also endure for someone 100 years from now. And I wonder how much of the change in what we build. I think a lot of things have driven a change in time preference, monetary policy being one, from like on an institutional level, how things are financed, monetary policy being one, accessibility of qualified labor being another. But I wonder how much, this just occurred to me, how much our mobility as a people has impacted our time preference. Like, as you were talking, I was like, well, do people in New York even really need to own? Like, why would you want to own in New York if, like, you have to be at a certain point in life where you're going to want to stay in that apartment for a long, long time. And why would you want to own something if you're only going to own it for like 4 years? You probably shouldn't own it.
That's this concept of very closely tied in stewardship that I've been meditating a lot on. And I think so well pointed out that if, let's say 150 years ago, where we had lesser mobility and you knew you were going to stay in your community for 80 years, that something that you built when you were 25.
And you knew your children were going to.
Right. Like, and they're in your children's children and so on and so forth. You built with what I also note in this last piece, a pride imperative, where you build something that goes beyond purely quantitative, rational thinking. There is this qualitative aspect imbued into it. I think that's what small developers do, because they are embodied in their communities. They're not flying by night to, I'm looking at a site in Minneapolis and now I'm going to San Bernardino and Tallahassee's got something going on. They're only focused on making their block a little bit better. And they have very low time preference, and they have static geographic needs. So how good can I make my corner of the world? It still happens, right? But it's a more difficult, just because the global markets have been opened up. And so if you can work remotely and you can do projects just as easily, I have some friends now who are building, and we have a mutual friend who's building in Costa Rica, and I've since talked with a couple more who are looking to build there.
He called me while we were chatting.
There you go. Yeah.
I should have conferenced him in.
Absolutely. Yeah. He's building some of the best stuff, in this hemisphere, as far as I'm concerned.
Yeah, this is Charles Brewer developing Las Catalinas in Costa Rica. Everyone should go talk about low time preference. Though it's it's a great project, so it appears, at least to me, financially doing really well. But talk about low time preference.
That's right. And when these are sort of the imperatives that institutions can't have. I always like to step back a second and try to analyze why people are doing certain things. So let's take Charles.
I have this quote highlighted from you on Pride, the Pride imperative. So as you're diving into that, or like to tee you up on that, can I reread something from the paper? So I hope people go, just an excerpt from it. You say, we should care about the institutionalization of real estate for two primary reasons: one qualitative, one quantitative. And first up, the qualitative. It's my belief that it's better for the health of the neighborhood if more buildings are constructed by the people who live within it, or at least in the area. Fewer local developers, the corollary follows, diminishes the health and character of the neighborhood. When you build in your own neighborhood, a pride imperative materializes. So I love that section. And you go on for, a couple pages about the whole pride imperative thing. I love that part.
And I wish we had the depth of this conversation before, so I could mention low time preference, because it's very true. But let's take someone like Charles, who's able to build for himself, and he might have some investors, but on the whole, he's had extraordinary success earlier in life, but also through development, in the States, and then able to do kind of whatever he wanted to do, right? And so he has the freedom to do that, and I'm sure there's any number of restrictions still are there, but in a way
the deal still needs to pencil, but
absolutely,
he's got more latitude about
it. That's absolutely right.
Yeah.
Versus an institution who has high time preference, not because institutional investor, not because the managers are bad people, not because they're inherently greedy, not because capitalism is the worst political economic system that anybody in the world has ever dreamed up. It's because their investors are pension funds and university endowments and insurance companies. And so who are they? When you see that 501 on the side of the road in Dallas, who's actually making money off of that? Sure, there's management fees that are going to Blackstone or Avalon Bay or any of these large builders. And Blackstone doesn't directly invest in these projects. There's a whole can of worms there that's almost not worth getting into, the myth busting. But just to use as an example, they take their management fees and they take a carry if the project does very well. But most of those fees are going to the 7th grade science teacher that lives next door to you. It's her pension. And it is almost impossible to be able to explain this to someone who is not well versed in the institutional landscape, because it's 5 or 6 layers deep in an almost like this significant distortion of how the built environment should be, because everyone thinks my neighbor built that house, they live in the community for 70 years. That's great. To go from that to some no-name suit in New York flew in to exurban Dallas, working with
vest. Now you point out it's no longer a suit; it's a vest.
Sorry, you're right. The vest. You've got a great vest on, so I don't want to use
High Country Outfitters. Little neighborhood outfit, go by.
It's terrific. And they're using an architect from Chicago and their engineers from Houston. Every group is coming from out of town, where that's a distortion that would not have been possible 50 years ago, 70 years ago. Yeah, you could have gotten on planes, but it wasn't quite as easy to move around. And certainly capital wasn't as mobile. And then this hyperscale that we talked about at the beginning from the 90s, it's not just the vest in New York and Chicago or wherever it might be. It's that the pension funds and the institutions have never been so large as they are now. And when you're playing with trillions of dollars and you allocate even 100 basis points variance, year to year, they have their end of year budgetary meetings and they go, look, last year we need to hit 7.5% returns because Mrs. Petrucci needs to have a hip replacement or whatever the case may be. And last year we only hit 7.4. And that might not seem like a lot, but it means that our pensioners all received $1,000 less, whatever the number is. And that has material impact on someone's life, especially if they're at the later stage of life and they're relying on that pension. So they say we need to increase our allocation to alternative assets. That means we need to get into real estate. That means we need to do it at this scale. We need to take a certain amount of risk off, so on and so forth. The people who are shepherding this, they might not be thinking about Mrs. Jones or, Mr. Karnowski, but they are acting on behalf of them. And that's whose money is there. And that money has never been so large and so mobile and so easily allocatable as it is today. It's very difficult to wrap our minds around that.
It's the supply chain of the money, I guess, is maybe I'd call it. It's so long, so long, and the return received by the investor is so distant from the thing being invested in. It is. I don't even know if it's a real term, though. I know people use it, but I use the term financialization of everything.
It certainly is.
But you offer up the good. You offer up the. I don't know if you're even attempting to steelman that, but you're saying like, hey, well, this is a good Ms. Smith needs this is her thing. This is important to her. She needs these returns.
And I think it is a steelman because it's so easy to scapegoat these institutions. And the last point I'll just I should have mentioned this. Back to low and high time preference. The reason the time preference is high is because Miss Jones doesn't get her payment unless that investment is successfully exited. So unless they sell the building to somebody else, and the institutional investor is highly, highly, highly incentivized to sell that in as quick a time period as possible, because their returns are calculated on a holding period. So internal rate of return is highly manipulated by time. So the shorter you hold it, the higher your returns look. The higher the returns look, the higher your carry is. The better you can go tell the institution, hey, you guys wanted 8.5%, we got you 11, or whatever the number might be. Versus a small builder with a very low time preference doesn't have to worry. They're not concerned about their home. Maybe they will, but let's say it's their own home. They say, I'm going to live here 40 years. What does it matter if I receive the money back in 24 months or 30 months? That's going to be all washed away in time.
I like how you put it in here. You said small developers, and I'll kind of mash some things together. Small developers, they're far more likely to be long-term holders of the places they build than larger merchant builders who seek to juice returns in anticipation of the sale. They often they defiantly underwrite rents lower than what they might be able to achieve because they don't want to spurn the community that gave them so much. They often build strange and superfluous design features for no other reason than they like them. Guilty. They're able to be far more flexible in rental rates, terms, so on and so forth. Those narratives rarely make the headlines as small developers seek no glory and receive even less. I don't know if that's true, but are nonetheless prevalent. They like the glory. I don't know if they ever get it.
Some people love the glory. So some of the best builders, you can't even find who the LLC who built the property was.
Totally true. That is totally true. But I have to just, for me, nothing makes me happier than someone really enjoying.
Certainly.
Someone just totally enjoying something I've had a hand in creating. It's like, that makes me happier than anything. It's just,
that's this great fulfillment. And that's the narrative that I'm trying to push out a little bit, that developers are your friends. They're your neighbors. We're real people. And especially small developers aren't folks to be villainized. Often they're the most engaged in the community. They're going to the most events because they know a lot of people. Because if you're trying to build even the smallest structure, there are dozens of people who are involved in that project and very intimately intertwined into a community, right?
There's a dynamic in my neighborhood. There are some great developers who do work in our neighborhood who are who've been here forever, who live in the neighborhood, all this, building really cool things here. And then there are some really terrible ones. Terrible ones don't live here. And not many, but there's some. But something I've observed, even with the developers who live in the neighborhood and are doing projects within the neighborhood, the immediate area, when we're in a particular climate where developers are especially vilified, then what happens is to do a project, it's, sometimes you're by right entitled, but even in that case, it's kind of a public process for securing your permits and doing something, particularly if it's even remotely unorthodox. But what happens when it's a particularly antagonistic environment between the community and the developer, the good developers just don't want to deal. Like they're not going to go do that. They're going to go somewhere else. So really what you end up with is the psychopathic people, the only people who really love, they totally don't care that they're being attacked, or they don't care what the community thinks or whatever. Those are the developers you end up with. The more antagonistic your entitlements climate or whatever you want to call it is. It's a weird thing where you manifest, a community can manifest disaster by being confrontational with development, because they will end up only attracting, the only developers who want to work in that community are the very ones that they don't want working in the community.
There's a very cynical response that I'll say first, and then a more optimistic response after. But good. I think the cynical response is that we all get what we deserve. So if you set out that, if you reap what you sow, and, I'm sure we can go further there, but keep it there for now. And then the optimistic response is like, if you cultivate and engender a spirit in the community that, and we've talked about this at length offline, that empowers a local community to go out and build for themselves. So historically, that might have been a local community bank, but unfortunately, we've seen closures of small lending institutions for in the wake of Dodd-Frank and the restructuring of the financial system post GFC. But it doesn't take much more than one or two people to say, we're going to sponsor, we're going to encourage people in this community to build better. I've been talking about this example for the last several months because I think it is such an empowering example in Santa Barbara. And I might have even mentioned this to you. I've mentioned this in other talks. The very, very high level is that people today view Santa Barbara as one of the most beautiful cities in North America, I would say. When everyone goes there, it's a gorgeous Spanish revival city. It did not look like that 100 years ago. 1925 was sort of the inflection period. There was one or two Spanish revival buildings before then, but big earthquake knocked out the city. 2 civic boosters, a couple more, but really, really 2, said, we're going to encourage the development in this specific style. We're going to welcome in several architects to build this style. We're going to sponsor them. And now people think of Santa Barbara as a Spanish revival city. And that is within this past century. There's no reason why any community, you think about even in Asheville, there's a lot of Tudor style homes and Vanderbilt Village is, I don't know if that's the name, but near Biltmore Village. Biltmore Village. A lot of Tudor homes. There's no reason those homes should be Tudor. There's no contextual relationship to the English Tudor style, and yet it's there and it's wonderful. That was a discrete decision made by 1 or 2 people, and now an entire neighborhood has that personality, right? So
contemporary wise, what Charles is doing at Las Catalinas is
it's the same thing.
Modern,
it's the exact
thing. Yeah,
that's right.
I've been this kind of really hit me the first time we did we've only done it twice, but the Ion Dialogues a couple of years ago. And I don't know if we'll keep doing that event. And I think we'll keep doing it, but a different format. I think it's going to get smaller. And I think we're probably going to focus more on more on real estate developers and just pull real estate for more intimate talks about building great places. But something that I leave that generally, we do a lot of commiserating and belly aching about what's difficult in the industry, but something that makes me so optimistic when we get together, where I met you, also Bo Wright and Thomas Dougherty, and all these great young people who are getting into real estate development. Placemaking to me right now, the profession of creating beautiful places, seems to me like it has a bit of the buzz that I remember was going on in the sort of the early .com era and through that, where everybody wanted to go into that, and whatever. And now I feel like everybody wants to get into building beautiful places. And that is so exciting to me to like be around in these kind of the urbanism circles and all these incredibly talented designers, like the young architects that are architectural designers who are producing amazing stuff. Like it's so great. And the young developers that are working on things. And I think we moved from the biggest challenge to doing this was regulatory. And I think that still remains a huge challenge, getting projects entitled. But I see so many signs of optimism and sort of the regulatory climate improving for building great urbanism, which we haven't talked about that much outside of codes, but it's access to capital and financing new projects for young developers who, and young meaning not tenured, particularly who don't have a long track record or don't have sufficient balance sheet to do the projects. But that seems to me like the bigger challenge. Like the demand is there and the interest from people getting into it is there.
Yeah.
And I also feel like the trades issue, which is really difficult and challenging, is going to be self-correcting. And in 20 years from now, things are going to look very differently than they do today. But it's like all this energy and enthusiasm coming into the world of placemaking. And it's really exciting to me. I mean, you've got to feel that. Like, what brought you into it? You've wanted to do this since you were very young, right?
Yeah, it's. I think you're spot on with the energy, and we can be victims to our own echo chamber at times, where we're all very excited. But the not a bad thing at all. But I think the pie has certainly grown, and I hear from any number of people who are software engineers or they're accountants or some other profession, a career track that has nothing to do with development, but they're very interested in the built environment, which is incredibly empowering. For me, it's precocious, and I'm cautious to say it because who knows, who can really say when they're 15, I wanted to be a developer. It just doesn't, it seems completely contrived, right? They say like, I'm a developer now. I always wanted to be that. Most people have no idea what a developer is, generally. When I say I work in real estate and I'm a developer, they go, you sell apartments. They go, not quite.
And honestly, it can mean like 50 different things too.
Yeah, that's right. Yeah. But so I've just always, I've always been interested in it. I think it's probably growing up close to New York, but neither of my parents worked in the built environment. I grew up in a suburban community outside of the city. I was taking the train all the time and going to the city. And I lived within a mile of what I thought was a big city growing up, or like a big suburban city. It's called White Plains outside of New York. And obviously having the city. But I can't really pinpoint one reason why. Maybe it was just being imbued in that environment. But I think today, especially in the post-COVID era, and I wrote a little bit about this, people spend so much time at home and wondering, one, why does my community, why is it so bad? And two, why is it so bad and so expensive? So I think they started to try to find answers to those things, and they branch out and said, well, why can't we I just went to Japan. Why can't we build Japanese style villages that are really charming? I just went to Colombia, and God, what a beautiful country. Can't we do some of what the Colombians are doing? And I think that spirit is really being applied in a way that in the post-war paradigm, development paradigm, which is really when like a lot of this institutionalization began, people just acquiesce. They're like, I have communities used to be shaped by a lot of hands. They used to be shaped by, the butcher would build the 3-unit apartment building and, have a real vested interest in the neighborhood. And that totally changed in the post-war period. And people just put their hands up. They said, what can I do? And I think we are.
Do you think maybe people bought into it? It was like, oh, this is how it is now. This is how it's supposed to be. I feel like the whole organization man attitude of you came back from the war, you were an organization man after that. Like you believed, and there's this broadly shared vision for the community. We're all going to align and point in the same direction. We're going to be part of a much larger team. And maybe a stronger national identity, less of a local identity. I'm interrupting you. Sorry.
No, I think that's totally right. And I think if you combine that with this notion of modernity, where we have learned from the past, we've had these 2 egregious world wars. Well, modernism began percolating before World War I, but it really gained steam in the post-World War II period. That said the city is a machine for living in. We have all these industrial processes, Taylorization, of course, that's early 20th century, late 19th century. But because of this industrial revolution and scientific revolution, we know more. Our ancestors knew nothing. They were primitive. They were brutes. They got us into these world wars. They didn't have clean running water. How foolish were they? So we need to reject everything that came with them, which is effectively what modernism espoused. And now, there was postmodernism, which rejected that, but in its place, there's postmodernism philosophy, which is a very different thing, but postmodernism in architecture and urban planning rejected it and said, we're going to be very fun-loving. We're going to show that this is farcical. But I think it was too tongue-in-cheek, and I don't think it was serious enough for the quality of spaces that people live. And then nothing replaced it. So we've kind of had this void for the last 60, 70 years.
When would you say the postmodern era ended? It doesn't seem to me like the modern or the era of modernism
there's still
ended. Yeah,
there's still vestiges, but I'd say in postmodernism, 70s, 80s, 90s. Learning from Las Vegas. I want to make sure I'm getting the learning from Las Vegas, or it's that's right. 1972, which is Robert Venturi and Denise Scott Brown, was kind of the genesis of postmodernism. And through the 90s, and modernism, still there are vestiges of that philosophy that pervade certainly architecture. Like architectural pedagogy is all modernist, but at like a societal level, I don't think you can't call the Texas Donuts or the sprawling subdivisions exemplars of modernism. They're McMansions or they're Mick apartment buildings, right? Like these are qualitatively different things than what whether one agrees or disagrees with modernism were. And so there isn't a school. If in 200 years, if you look back in architectural history, what would you say the prevailing style from 1990 to 2025 is?
I would say it is high time preference style. That would be my guess.
That's right. And
it was the period of the financialization of real estate where the pensioner in Akron was unwittingly an owner investor of Texas Donut in Fort Worth or Atlanta or Columbus or wherever.
Yeah.
And there was no connection between the purpose of the investment was a near-term return.
Yeah, and I think there's no operating principle for that other than high time preference and maximize returns. But there's no identifiable design school with it. Like thinking from an architectural historian's perspective. Like maybe you can say,
yeah, I think we're in a weird transitional phase. I think in much of academia, modernism, my impression is modernism is still sort of broadly celebrated, or
yeah,
I don't know if that's true or not. I didn't go to architecture school. I just know lots of architects.
I think it is.
But I do note that and I view this as a sign of optimism. There is one school. There's actually more than one school, but there's one prominent school in the entire nation, maybe galaxy. And I guess in outside of the United States, there might be some other schools doing this that focuses on traditional classical vernacular, which is Notre Dame. Mm. And historically, Yale has been producing the highest paid fresh out of school architecture graduates for the last several years. And someone should fact check me on this, but I think this is the case. Notre Dame is producing the highest paid graduates. Notre Dame is producing graduates from architecture school that are earning more than Yale. Yeah. Which has got to hurt the Yaleys. They have to hate that. Whenever that comes up in conversation with modernists, they get all mad at me and they're like, "Oh, money's the only thing that matters." I'm like, "No."
Suddenly,
I can tell you're pissed off about that.
Well, that's my sense too. I don't know about the latest surveys, but I've certainly heard that. And what I've heard, the reason for that is not, well, there's, to talk about architectural history for 1/2 second, there's this interesting juxtaposition between modernism and traditionalism, which is strange because traditional can mean any of 5,000 vernaculars. 19th century Bhutanese architecture is very different than 16th century Flemish architecture, but technically they're both traditional, right? Modernism means one style. And you can have deconstructivism and you can have, there's a couple of derivations, international style, sure, but it's really just one style, flat, rational planes, rational materiality, so on and so forth. So my sense of why Notre Dame graduates are able to do well in the workforce is because they're taught architecture from a first principles perspective. Like, what is a house meant to be? It's meant to be a place to live. And in order to get an understanding of how best a house should operate, let's draw it out. Notre Dame students draw homes. You don't do much drawing by hand in many other architecture schools. So you have an innate connection from the beginning there. And because you learn sort of the classical orders and the traditional ways of architecture, you can very easily apply that to any other style of design because you have the foundations right. Versus at other architecture schools, when you're taught a certain ideology or orthodoxy, you don't know how to do anything else other than what's in your lane. But if you provide, it's basically this versus this. And so that's not, there are some very well accomplished Notre Dame architects who are not designing quote unquote traditional buildings. There's excellent contemporary buildings that they're doing. And they're able to do that in a way that, might not be as easily for someone else with a different.
I don't want to, I would say that it is my observation that the overwhelming majority of other schools, if you want to pursue that type of education and a deep understanding of kind of first principles of architecture, you're going to have to put in a lot of work on your own to do it, rather than it being kind of, this is the program and this is what we're doing. Just that it's so successful. And now I don't know when. I feel terrible blanking on the names. The dean that pioneered that change at Notre Dame. but I think we're probably like 30 years in, 25 years into that change.
Yeah.
And it's bearing enormous amount of fruit. Like some of the greatest projects being done now, where you can almost tell they have the hands of a Notre Dame graduate. And
yeah, that's I think agreed on all points there.
Yeah. So Coby, thank you for spending time with me. This is probably a good place to start. I want to talk to you again. Because we touched on a lot of topics that I think are worth pursuing more. Will you share with us your outstanding follow on Twitter, Coby Lefko with a K? Is that right?
That's right.
Coby Lefko with a K is for Coby Lefkowitz. Share everything else where people can find you.
Well, thank you first so much for having me on. I'm whether it's online or offline. Keeping all these conversations going, super important. And I really get so energized talking with you and much more exciting stuff to come, I'm sure. So yes, Coby Lefko on Twitter, our built environment, my New York accent kind of slipping in there, OUR, our built environment, on Substack. We'll be back to publishing articles more frequently. I've been on, it's not book leave because the work doesn't stop, but I've just about finishing up editing my first book. And so that's it's been a really great process, but about 400 pages in, 140,000 words. So that's taken up all my writing time for the last year or so. And so that'll be out hopefully in the next, I don't know.
Do we have a name?
It's called On Building Optimism.
Oh, excellent. Totally. You're the right person to write that book. Well, thank you so much. I'm going to link in the show notes, so y'all please look at those for some, both this article that we touched on a lot and a lot of the other things we talked about. Coby, thank you for joining us on Yeoman. I hope you will return. So long as the offer is there, I will be here to accept it. Excellent. All right.
Thank you, Jeff.